Well, good morning, everyone. It's great to have you all here for the Riding Unicorn Summit during London Tech Week. Lots of familiar faces in the room, lots of Cooley clients and friends, so I'll keep this short. But for any of you who worked with lawyers, we can't help but talk about ourselves. So for those of you that don't know me or us, my name is Eric Davison. I'm a partner in Cooley's private companies team here in London. Cooley's a Silicon Valley originated global law firm. We specialize in working with fast growth tech and life sciences companies at all stages from inception right through to IPO and beyond. So we've been doing it a long time. We formed the first venture fund in the 50s back on the West Coast, and we've been at it ever since then. So we're a full life cycle advisor. So we work with companies from inception through their entire life cycle as private companies, and then as they grow towards a sale or an IPO, and then continue to advise many of those companies as public companies. So we brought that same Silicon Valley model to the UK, and it's now 10 years since we opened our London office. Our 10th anniversary was a few weeks ago. And a lot's changed in London over the last 10 years. So gone are the days when US investors would insist on English companies doing a Delaware flip before they would invest. And it's no longer the case that a $250 million sale would make the front pages of the UK broadsheets. So I firmly believe that the future of London tech and life sciences is incredibly bright. And Cooley's all in. Well, that's probably not the right thing to say with Riding Unicorn. So maybe I should say Cooley is deeply committed to London tech and life sciences ecosystem. So we've invested heavily. Over the last 8 months, we've been joined by Ali Ramadan, Helen Pantelides, and most recently Angus Milne. And together with my partners, Aaron Archer, Tom Goodman, Simon Amies, and Ryan Naftalin, we're now the biggest group of partners that are exclusively dedicated to working with tech and life sciences companies in London. And we're not done yet. So with that, I'll hand it over to the guys. So, take it away.
Hi, everyone. Thanks so much for coming. So I'm James Pringle, Hector Mason. We're the co-hosts of Riding Unicorns. Thank you all so much for coming. It's been almost 5 years since we started the podcast, and it's been a great experience. It's really been a game of consistency over anything, and it's been a hugely valuable experience, and it's great to see so many of you here. We've got a couple of short chats today that we think are going to be really interesting for anyone working in the venture and startup space, opening up a few different topics and ideas. So without further ado, we'll have Yoann onto the stage.
Yes. No.
Awesome.
Good morning.
Cool. So, I think the best thing to do would just be if you could just introduce yourself, explain some of the companies you've worked for, helped with growth in the past, just so everyone has a little bit of context.
Yeah, I'll try and keep it short. I've been in London for almost 15 years now. I worked in startup and tech for most of that time. I was one of the first growth marketer at Deliveroo in the early days. That's how I got the bug, I guess. Then I did a stint in Depop as well. I was the first growth marketer there. So 2 very successful ones out of the exited unicorns in the UK. I did a bit of B2B marketing in a company called Perkbox, which I think also exited last year for a little bit less than a billion, but we'll take it. And I am now, I'll skip a few, but I did a bit of fintech and everything. But I'm now in AI, a company called AI Apply. I've been there for like a year and a half almost. Very different setup. Raised a little bit of money before I joined, and now kind of bootstrapping the company. So that's an interesting also avenue for us, for me. It's very different. We're helping job seekers find a job, which is a very important topic at the moment. It's really hard to find a job. So I've been doing that since.
And Yoann, you're known as literally one of the best growth guys around in the UK, but probably globally.
Maybe.
What are some of the mistakes that founders and companies are making when it comes to growth?
It's a good question. I think one of the mistake I see the most is that the concept of like distribution of whatever you're doing, mostly on the consumer side of things, maybe on B2B slightly different, but I don't know, there's some parallels there too. Founders and early stage startup have no idea how they're going to get their product out there, or maybe an idea, but not necessarily the good one. And that's, I think, should be the other way around. I think nowadays, especially in the last maybe couple of years with this new era of AI, and we'll talk about it in a minute, like vibe coding and vibe marketing. I think it should be the other way around. I think you could solve your distribution before you even build your product, and that would make you, I don't know, exponentially more successful when you start. So,
can you give us an example of what you mean by that?
Well, I've got a very good example for this that happened a couple of months ago for us. I had an idea for a new product for AI Apply. Very stretched in resources, obviously, because we're very lean. It's actually just 3 of us. I'm the only employee, by the way. So it's 2 co-founders and myself. And basically before building the product, we were like, what if I just mock up some of that product on Figma or whatever, like something to visualize it, and test the virality of it on TikTok. And even myself was very surprised. Like, first video got 700,000 views, a ton of engagement, like thousands of comments, like, why do I do this, etc. And then it was really awkward because it didn't exist. So I had to like pull back and just go like, we need to build this like yesterday. That's what I mean by that. I think there is a lot of, on the consumer side of things, I think mostly, which is more my thing, I would say. There's a lot of ideas like that could be tested before they're even worked on. I think you can save a lot of time and just validate that consumers want it.
Yeah, absolutely. And you touched on it a little bit there. We're in a world of vibe coding, and the cost of building software is coming down and everything. So maybe brand and distribution becomes even more heightened as an area of focus, and that's a great example. What are the ways to, you've just given an example there as well, but what are the growth channels that are really working, and the ways that people can validate some of their new ideas and thinking?
So I'll give a bit of to go back, a bit of context of where I'm coming from. So I'm a paid guy to begin with. That's how I started at Deliveroo. I was doing ads on Instagram, Facebook, was working very closely with the Facebook engineering team to like triangulate restaurants to like where like very like deep kind of ads discussion with directly with Facebook at the time. And that's how I started. But nowadays, especially in the last, maybe I would say last year, really, it's quite recent. Distribution has become the main focus for me, more than ads. So organic distribution, which oftentimes means social media, has changed drastically. Before, as we know, or at least I would say maybe most of you would know, social media was an interest, not an interest graph, a social graph based on who you follow, followers counted. And that's how your content was distributed mostly. So who you follow mattered. That has changed with TikTok coming into play, and now most algorithms, if not all algorithms in all social platforms, are based on interest graph, which means any piece of content, singular piece of content, can go viral on its own, regardless of the size of the account. So
just on that, is like building a following dead? Like, does it not matter that
Oh,
if
it
you've got
doesn't matter
followers?
at all. It still matters to me a little bit internally when we're like, oh, I'm going to talk to so and so to present who we are now. And the fact that we have, I don't know, like now I think we just passed 56,000 followers on Instagram in like less than 12 months. It matters for some people. To me, it doesn't matter at all. But maybe internally, or if you're raising, some people might see that as like the vanity metrics that does matter a little bit. But I think from a pure growth point of view, it shouldn't matter at all.
So what is the metric? Is it just like engagement?
Engagement, yeah, purely engagement. So that's been my focus as AI Apply for the last year and a half. Meaning the notion of a single account for a branded account with brand guidelines and approval meetings to what your next 10 pieces of content are going to look like, for me is completely dead. We've got 25 accounts on TikTok, just for AI Apply, and you might find them if you look for AI Apply, because they kind of have AI Apply in the name, but they don't even have to. It's the name of the creator that runs the content. It's about how do you recruit creators to run content for you. It's about running the winning formats that I talked about, testing product with winning formats on TikTok that you have a higher probability to go viral. How do you multiply that and it becomes a scale kind of strategy? Like, how many accounts can we create? And when I checked last time in May, I think organically without ads, we generated 55 million organic views across Instagram and TikTok just with that strategy. So it's not like it's the thing, like it's not a joke, like it's very, very important. And I think it's still very underutilized. I think you see some people talking about it, like on X, for example, like, kids doing apps. You might have heard of like Kale and those kind of like new apps that have been developed by like a 19-year-old and doing like, I don't know, 3 million a month already with like 2 people. That's how they do it. That's the strategy. So it's out there. Just need to get to it. Yeah.
We need to sit down with Yoann to get some more impressions.
Yeah.
And we've all heard of vibe coding.
Yeah.
Tell us a bit about vibe marketing. I mean, we've seen a few companies in the space raising good rounds. I think Creandum, I don't know if we've got anyone from Creandum in here right now, but I think they've just led a hot round in a vibe marketing business, which I think they flew in the lovable founders to help win the deal for that, which makes sense. But tell us a bit about how you understand vibe marketing.
Yeah, that's a good question. I feel like I've done vibe marketing for the last 10 years. I mean, and just look at the way I dress as well. Like it's just it's just a vibe. I think vibe marketing nowadays means mostly automation. I think it's a little bit overused in comparison to vibe coding, which is very impressive. I don't know if you tried Lovable or one of these tools before in the last few weeks or last few months, but it's insane. Like you can just write a couple of sentences and then this whole website is built in front of your eyes, and you can just add elements, connect your whatever you need to connect to data sources and Stripe accounts and all of that. I guess it's crazy. I don't think we're there with marketing yet. I think most of the time we're talking about automations, and there's like pretty sick automation that are already pretty useful for marketers, like plugging where customers are talking about you online, doing summaries, giving you ideas for ads and new angles, and doing copywriting for your emails and things like that. I do have some people helping me in the team, but I'm a Swiss knife of growth. I do like pretty much everything on my own. So I do need these automations to work. But I wouldn't call it's not the equivalent of vibe coding, I would say. Maybe one example I could give that as the elements of what vibe coding is obviously, so our tool is not bound by geography. So we're worldwide. We're getting customers from everywhere in the world. We started with English. And you know that as a growth person, the two biggest levers you have to grow a company is either go into new geographies or just launch new languages, because you just open your TAM just massively. So I was thinking about that in the early days. So like I'm talking about like maybe 8 months ago, something like that. And kind of vibe my way into connecting what users were telling us on the website, that which language they needed that was missing. We had like a pop-up questions like, you know, like which language do you need your CV translated into? Collected that data. Then I spoke to our technical co-founder, Peter, and who's 22 years old, by the way, so pretty impressive. Who together we kind of connected an AI agent who's coding the same way like Lovable and these kind of tools work. Was able to code the website, the JSON of the website into any languages that was requested by the user, create a pull request, and then all we had to do is just deploy. And now we have down autopilot. I think we're at 15 or 16 languages. Every few weeks, we look at the new #1 language, and it's all automated. So I was that impressed me. Even I was like, this is sick, because I remember the days at Deliveroo's, at Depop, you know, like going into a new market with a new language required so much effort and so many people and so many meetings and translations and all of that. I mean, I'm French, so I could adapt with one language, but it was tough a few years ago. And now it's all plugged in, like end to end, no humans. And that helps growth massively. So, yeah.
Yeah, it's exciting. It feels like it's just the start, and there's probably lots of experiments that you're running on lots of things, but it's really cool. Well, we promised that they would be fairly quick fire, but thank you so much, Yoann. I think you've already opened our eyes to some of the possibilities. It's great to hear more about that space, because it's definitely important for us all as investors or as founders. So thank you.
No worries. Thank you for having me. Thank you.
We've probably got time for one question, if anyone's got a quick question for Yoann. If not, that's fine. We'll just, oh yeah, go on.
It's a good question. So yeah, to give you some numbers that I can share, I can't share everything, but we've grown from like zero when I joined, almost zero revenue, to multi-million AR in 12 months. We've almost have 800,000 users now that have tried the tool and generated an application. So like CV, cover letter. So we've got a lot of data. I think in the last month or so, we've realized we need more people. And then what does that look like? I think you can still be flexible with recruiting, still on the freelance basis, not necessarily full-time. I think we're still finding it easy to recruit developers. Mostly that's where the gap is right now. It's like, how can we sustain the size of the traffic we're getting with, we've got like 6 or 7 like mini products within the product. I think the dev side of things is really the one that we need to plug in, but we managed to do that through freelancers still, because we do want to keep things very lean and really like plug and play, and we hope that will continue like that. But it's a good question. I don't know, like when we get to multiple tens of millions in ARR, it'll be a different discussion, but maybe we'll sell at that point. So.
Awesome. So we will still need developers. That's good.
Yeah.
Good to hear. Sure. Awesome. Thank you so much, Yoann.
No worries. Thank you.
So now we're going to have Oana from Dexery on, and we're going to talk a little bit about robotics and hardware. So the general theme around this is that I think a lot of venture has avoided robotics and hardware. And so we're going to tuck into that a little bit and see why things might be changing. So Oana, maybe you could just introduce Dexery and yourself.
Sure. Thank you so much for having me, and hello again. So I'm Oana. I'm one of the 3 co-founders of Dexery. My day-to-day role is Chief Commercial and Product Officer. We operate in the robotics and AI space, specifically for warehousing and logistics. So not just that hardware isn't sexy, warehousing and logistics also isn't a very sexy sector either. So very interesting intersection there. But I think, yeah, a lot has changed since, 10 years ago when we kind of started as a founding team working on some sort of robotics. There's been a lot of shifts and pivots, I think, along the way. But Dexery, as it is today, has existed for about 2.5 years. And I think, yeah, it's to your point, and we'll dive a little bit deeper into that. A lot have changed in the meantime, especially after the pandemic. So yeah, excited to share more about the journey.
Tell us a bit about that journey. So you've been going a while. I think it Bots and Us to start with, and so you raised pre-seed and seed under that guise, and then rebranded to Dexery, and 2.5 years in its latest form. How's that sort of journey of fundraising developed over the years, and obviously as robotics has now become a hot topic?
Yeah, so it's a long story that I'll try to keep short. So yeah, 10 years ago, and I think there were a few people in the room that we were talking to at the time under the Bots and Us umbrella. It was us 3 co-founders, myself more with a business kind of hat on, and the other 2 highly technical, one more from a hardware perspective, one software. So we kind of came together behind this big ambitious goal to make robots for the home. So initially we wanted to make a robotic product that would help elderly, will help kind of keep an eye on children in the house, and put together the plan, start to build prototypes with 3D printers, Raspberry Pis, and everything that was kind of popular at the time, and went with that first prototype out to the market to try and raise some money. And of course, everyone looked at us, you probably crazy to even kind of consider to make a physical product, not to think about a robotics product, and then of course something that will go into people's homes, which is also extremely complicated as well, because at the time, I mean, the few robotics companies that existed were very much platforms for R&D and very kind of obscure industries, right? So we kind of said, okay, yep, venture's not going to be the way to do it. So we went out and got quite a bit of capital from grants. I mean, obviously, we went off to the EU as well. So the European Union was very generous and helped us to get ourselves set up, to get an office, get access to a lot of kind of, hardware-related production facilities, let's say. And we made the proper product and then went back to the same kind of venture capitalists and said, okay, we got a product now, we've got the first customers. It's working. And I think it was only then that we managed to get our pre-seed in, because people are like, okay, you guys were relentless into it. You kind of demonstrated you can do it. So here's a bit of money to get you going. The interesting thing is like we got the money in the bank for the pre-seed on the first week of the first lockdown. So after that, we're like, okay, what are we going to do now? Because we couldn't even access the office. The whole world was in lockdown. And we took a little bit of time to figure out where are we going to take the company next. And it was actually during that time, we were having some conversations with the retail sector as well. We were going to put some of the robots in retail stores to guide people around. And they kind of came to us and said, actually, forget about the stores, forget about the customer facing. We're having some big issues inside our warehouses and distribution centers because everyone wants to buy stuff online. In the pandemic, we can't get people in. We don't know where stuff is. We have zero visibility. Is there anything that you guys could do with your solution to help us there? So it was like, yeah, late 2020 that this idea of robotics in warehouses to collect data started. And 2 years later, yeah, we launched the product and haven't looked back since. And got our seed round, Series A, Series B since, and it's kind of grown the company to just about 200 people, launched in the US, and yeah, has grown a lot. So I think the moral of the story is that there's been a lot of kind of changes in what we did. And it was only at the time where, yes, we were building a very complex product, but we had very, very clear indication of the product market fit, of the demand of the market, that I think, yeah, the venture world was a lot more calm with the risk behind it.
Yeah, and were the pushbacks just around CapEx intensity and things like that? And what's changed? Why are people now maybe a bit more open-minded to robotics and hardware?
Yeah, I think it's a combination of things. First of all, the cost of making robotics has gone down significantly. So versus 10 years ago, when I was going to use this example, like LiDAR sensors that help robots navigate, it used to be about 10 grand a piece, right? We have LiDARs on our robots that are maybe 500 pounds. And that's kind of across the board on all the different parts of the BOM cost. Things automatically just became cheaper. So it's a lot easier to make hardware. And which obviously kind of helps a little bit on the capital side. There's a lot more kind of facilities to get debt to finance hardware. So that also kind of de-risks things a little bit. So I think from the cost perspective, that profile has changed. But I think going back to the chat that we're having earlier, especially in an AI world, there's been, I think the past 12 months or so, this big realization that it's awesome to build AI products based on synthetic data or generated data, but somehow you still have to have physical products that collect that data and also that interact with physical humans in different spaces. And I think with the boom that we're seeing lately is kind of based on that realization that no matter how much software you build, especially if more and more of the software is going to be built by AI, there is very little way to protect that and very little way to actually control it. But when it comes to the hardware side of things and the physical products, there's a massive gap in the market to continue to have that in. And especially what we're doing is we're using the robots to collect data inside the warehouses, and we're sitting on the biggest database ever that when it comes to logistics and supply chain. Obviously, we do a lot of that, and we do use AI as well on the other side and the value that we bring to our customers, but there is no other way to get access to that information. So it's a combination of, like I said, the cost profile is going down, and also the interest in having proper things out there in the world that support the software side, that I think changed the market a lot.
I think, yeah, I mean, we're seeing that in the VC market that, as things like Lovable and software does become much more commoditized, unless you've got some proper network effects, like it's a marketplace, there are real users who can create your defensibility long term. There's a lot more interest in that kind of hardware software combination. And do you think that will continue? Where could you guys take that from where you are now working in factories?
Yeah, I think you can take it pretty much anywhere in a physical space, right? And thinking about B2B applications, you can go back to what we were doing before when it comes to retail, when it comes to transportation hubs, event spaces. There's a lot of kind of elements in there. But I think the big theme that we're seeing is this bringing together the physical and the digital, whatever that physical may be, and the need to really understand the physical world in real time. So, I mean, we talk a lot about digital twins. Like the traditional way of making a digital twin is we used to take a CAD file of a building, you kind of make a nice 3D model, and then you say, yeah, I've got a digital twin now. It's like, it's not really a digital twin. This is like a replica in the digital world of something that was a year, 2 years, even 10 years ago. Like what you need is a way to monitor that physical environment in real time with exactly what's happening in there. So then you can apply AI tools to the actual real-time data rather than, again, a hypothetical scenario to it. So this culmination of that physical and digital coming together, it's a big trend that we're seeing. I think it's only going to continue growing, especially as you were saying that you kind of go into more and more spaces where you need to have that visibility.
Yeah, and if an investor was to go back and rewrite their LPA so they can do robotics investments, where should they be looking for talent? In the AI space, everyone's been setting up notifications for anyone who leaves DeepMind. What should people be setting up notifications for robotics companies?
That's a great question. Yeah, it's there's not yet that many big names, right, that you're going to follow. I think the interesting
universities.
So yeah, I was going to say, I mean, you could go back to academia, but rather than academia, I think I was just chatting to somebody earlier that there's a lot of communities that are built around robotics, like robotic operating system, ROS. We're a massive kind of contributor to that, and we have some fantastic engineers that joined us through the community. So kind of going to where the minds are behind the robots. But the other interesting angle is thinking about, I mean, you kind of, with AI as well, I mean, it's great to kind of build the product, but you have to start thinking about the practical applications of that product, especially when it comes to the B2B and enterprise world, which I think is still a massive kind of open field. So the other angle to look at it is people from within hardcore industries that have ideas that they want to build around, whether it's AI or robotics, a very kind of practical application that has instant ROI for those sectors. Because I still think, again, from what we're seeing out there, talking like we work across manufacturing, car industry, pharma industry, very kind of traditional, long-term, hard to disrupt sectors. But most of them do have, at the board level, kind of directive to embrace AI, use AI, do stuff with AI, but no one really knows what to do with AI. However, there are a few people that are coming out of those industries with very practical ideas. and coming out to the tech world and say, okay, I want to build this. So I definitely think there's an element around, rather than looking at the developers and the people that are coming from the tech angle, look at the ones that are coming with practical applications for it. Because I feel like that's the current gap that we're seeing. There's a lot of buzz, but not as much when it comes to actually bringing it in the enterprise world. And to us, this is where the value is going to come from in the mid future, I think.
Awesome. Any questions? Does anyone have any questions? Yeah, Nabil.
So I just had a question about, you mentioned that like LiDAR sensors have come down from like $10,000 to like $500. So that's like 10, 20x fold decrease in price. How many steps away are we from like 18-year-olds being able to start unicorn companies? Because it sounds like software has come with a bit more sensible from one price, like what else is
There's well, I'm not going to say that it doesn't apply to software, but when it comes to hardware, there is a whole ecosystem you have to build around that. So yes, you will have 18-year-olds who can make 1, 2, 3 robots. It's how do you do that at scale? And also how do you deploy that at scale and maintain that at scale in a reliable way? Because for instance, like we have now robots, I think, pretty much across the globe, almost all continents. We have to kind of maintain that fleet, ensure that it's constantly providing the right value, that it's working for our customers. So I think it's not going to be about like building the first robots. It's more how do you then scale those across the world in a reliable and sustainable way, and also in a cost efficient way. Because yeah, of course you can kind of like throw 300 people that monitor and support the robots from a dark office somewhere, but that's not the point, right? It's how do you do that still in a sustainable way. So I think it's I think maybe to what you were saying as well, Yoann, you kind of get to a stage where actually we do need more people to be able to scale this properly. I think with hardware, you probably need that a little bit sooner because it's just not something that you can do from behind the desk.
What is the right answer to how do you service this fleet? If an investor asks that.
Yeah, so it's very easy. I think first of all, you have to have enough. We kind of over-engineered our units a lot from the beginning with that growth in mind. So when you're actually building and designing a product, you have to think beyond the first 5, 10, 20, 100 units. You have to kind of start thinking, if I'm going to have 500,000 of these out there, what kind of reliability do I need, and how do I over-engineer from the beginning to make sure that obviously when they're out there, I'm not going to have this problem. So you over-invest at the beginning to kind of get the longer-term scale-up effects on the servicing and the monitoring and maintenance. And the other thing is just you have a lot of little sensors that track your every other sensor to be able to do a lot of predictive maintenance. So we've got tons of dashboards that monitor the fleet, that can flag if something's happening. So it's changed a lot from the model of like every 3 months an engineer has to go and check this piece of machinery. That's not the point. The point is like you only react if something is happening, and also giving yourself a lot of opportunity to do stuff remotely. So yeah, our kind of guys can pretty much log into any unit we have around the world. Typical kind of hardware laptop thing, just restart it, it's going to work. So sometimes that kind of helps it. So you reduce a lot the need to go on site. I think that's kind of the biggest thing, is like the more you can do remotely and the more you can track remotely, then those costs are going to be quite healthy.
Awesome. Any other questions? Yeah.
Thanks for the really interesting conversation. Given the current geopolitical situation, do you face problems with supply chain, like sourcing physical components? And to what extent can you kind of onshore or nearshore manufacturing?
So we're actually quite an old one, because we do all our manufacturing here in the UK. We do use, of course, off-the-shelf components and pieces that come from all over the world, to your point, but we do assemble everything here and then we ship them from here. And the reason we didn't want to go yet to proper kind of contract manufacturing is it gives you a lot of control and an understanding of the product, keeps it at the right quality, and also keeps that initial massive costs down. So if you do get a contract manufacturer on board, usually it's a few million to get it all set up. And then if you have any change at all that you want to do, that's another few $100,000 to just put that change in. So the more you can control it in-house and create a sustainable production line, then the better for the midterm. In terms of the components, so this is something, again, going back to my point earlier, is how do you make yourself as flexible and future-proof as possible? Ideally, you shouldn't rely on a few suppliers. So for every single sensor we have, batteries, like even caster wheels for our robots, we've built them so that we can shift suppliers quite easily. And automatically then that de-risks you being kind of stuck to one or another. And ideally, if you could do that with manufacturers that are across different geographies, that kind of makes it a lot easier. To be honest, it's not something that we're being impacted yet. I think it's versus like the immediate period after the pandemic when China was completely closed, things are flowing quite nicely at the moment. And even with the tariffs in the US, don't really kind of impact us as much so far. But the whole point is like, if you try and keep that in mind for everything that you have, if there's any kind of crucial component to your technology, make sure you've got options for that. And we do have a procurement and supply chain team that's fantastic at building relationships with those guys, so you can easily shift from one to another.
Does it actually give UK robotics companies an advantage over US counterparts?
It's a great question, and I think so, yeah. Because, well, at least for the next 5 years, probably, right? You just never know, because beforehand, it could have been either or. But I think based on a lot of factors in terms of the relationships that now the UK has with the world, even where we are based physically and time zones and everything else, I feel like, yeah, it's a great advantage to be here at the moment. And also, quite transparently, talent in the UK is still much cheaper than talent in the US. And when it comes to manufacturing, we've got such an incredible pool of people from the automotive sector, from the military. I mean, just people that we kind of have in our team as well, that are super high skilled, very, very good at doing high quality engineering and performance engineering. Like we have a lot of Formula One people that join us when they're sick of kind of doing the travels. So we're quite well positioned, I would say.
Awesome. Very exciting. Thank you so much, Oana. And thank you, everyone. So we've now got a big breakfast and everything. So please hang around for another coffee and some food. A massive thank you to Cooley for having us here today, sponsoring the podcast and just being great partners in general. So yeah, please hang around and have a chat with a few people that maybe you haven't met already. Thanks.
Thank you.